Yeah, good morning. It's Jim from JAGfx.com. It is Wednesday, the 18th of December 2024. Now, this is just my fourth video this week. We're going to have a look at the dollar cost averaging as promised. So, this is a little bit of a high risk strategy. We'll have a look at some of the charts and some of the rules, etc. and we'll go over it. So if you do like the video, please hit the like button, hit the subscribe button. That's always appreciated. I get it that my videos aren't the most exciting videos on the planet by any means. There's no editing whatsoever. The only thing I can do is pause if something goes wrong. All right, let's have a look. First up, we'll have a look at some of the information, just so it's more of a disclaimer than anything else, all right? So, like I've said in the previous videos, which was the loss recovery and also the hedging videos, which I did on Monday and Tuesday. Today is Wednesday, isn't it? Yep. So all initial trades, all the first trades are taken on a valid buy or sell signal using the high probability method. So nothing changes there. QMP filter dot and the MACD platinum being on the correct side of the zero level. So that's a give me. Now, you don't have to do this. You can place a stop loss. You can do different position sizing or sequencing. I'm just giving you ideas. What I'm saying is not necessarily the right way. It's just the way it works for me, all right? I do this on the daily time frame. I haven't really I have traded them in the past on lower time frames. I tend to get in more trouble on the lower time frames. So don't ask me if something works on a certain pair on a certain time frame. It's easy to test just for yourself. Just go on the historical charts, set up the template and go back in time. It's not hard, nothing repaints. It's a matter of getting a pen and paper and writing down your results and just following them along. You can eyeball most of them. You don't really need to write things down. You can just have a look at the charts and, you know, by using your cursor and a bit of maths in your head, you soon work out if something works or not. Now, there's nothing to stop you placing stop losses on any of these trades. I don't. This is dollar cost averaging, so there's no stop loss placed when I take an initial trade. All dollar cost averaging is just a term that comes from mainly the stock traders back in the day. So you'd build into a position that was normally on the long side, the buy side. So say price pulls back, then you buy, then it pulls back further, you buy more, then it pulls back even further, you buy more. So you put your average price up, brings your average price down for your entry, then hopefully the price will turn up and go through and get you out. It's similar in Forex. The good thing about Forex, it goes up and down just as well as both ways, whereas the stock market tends to have a bullish bias. And you could do this on the stock market, but I would just do it bullish, and you could use the same setup. I think I did a video once before. I might find it and put a link to it in this description of this video, where I just picked a couple of random stocks on MT5 and showed you how it worked. There was no dramas at all. Instead of doing 0.1, you might do, say, 100 shares, 300 shares, 500 shares, 800 shares, something like that. But anyway, I digress. Let's get into it. All right, the initial trade, if it goes in your favour. Now, this only applies to the DCA, the basic DCA. If a trade goes in your favour, you take your usual trade action, like price closes on the other side of the 20 simple moving average, or the MACD platinum's crossed to the zero level, then you close half and put a stop in place, and then there's no further fancy trade management techniques needed. A little bit different on two of the methods I'm going to show you, but it's similar thing. All right, just remember these are high risk trades, all right? You're adding to positions. Some brokers don't allow it. Some people aren't comfortable with it. So just be warned, it's high risk trading. So you have to be very conscious of your first initial entry, because you're basing your subsequent, that's a word I always have trouble saying, subsequent trade position sizes on that initial one. So I use the multiplier, which we'll get to in a second. Right, high risk. All right, I use the sequence of 1, 3, 5, 8, 13 on my trades. All right. So if my first trade 0.1, my second trade is going to be 3 times that, 0.3, and my third trade is going to be 5 times that, 0.5, then 0.8, then 1.3, etc. All right. Now it's loosely based on the Fibonacci sequence. It works for me. You could do any sequence you want. All right. So here's an example. You could use a Fibonacci 1, 1, 2, 3, 4, 5. Now that would probably actually work just as good as what I'm using. Or you could just use 1, 1, 1, 1, 1, 1, etc. There's nothing to stop you using the same position size and having the same concept. You're just not going to get the same results as me, obviously. You might get better results. You might be lower risk. You might be in a prop firm that would appreciate those because it complies with their rules, consistency rules or something like that. You know, there's nothing to stop you having 1.2, 1.5, 1.8, 1.6, 2 and 2.2 or something like that. It's up to you. I just give you ideas. Like I say, I'll give you a framework, give you some ideas. There's plenty of ways to trade, plenty of ways to manage trades. Like I said, don't ask me about other time frames or other pairs. You can check that out for yourself. No dramas at all. Now we're just about making money. That's all we're here to do, make money with as low stress as possible. What you do with that money is up to you, all right? So we just want to protect capital, make as much money as we can, then do what you want with that money. If you want to spend it on alcohol, sex, drugs, and rock and roll, that's up to you. But if you want to, give it to a charity, even, better to you. All right, we've already covered the multi-sequence hedging, and there's the pairs for that. Traditional hedging, we've already covered that, and the 2 loss recoveries. Now here's the dollar cost averaging. All right, so we've got the dollar cost averaging, DCA, then we've got plus DCA based on Bollinger bands, which are called DBB, and DCA based on overbought, oversold on the QQE advance, which I just call DQQE. You'll see these in a minute. I'll show you them on the charts. Now, these are some of the pairs. These are the pairs I'm trading with. 1, 2, 3, 4, 5, 6, 7. 7 pairs. I've got 7 pairs in each list. AusCAD, Aussie, New Zealand, CAD Swiss, Euro Swiss, Euro Pound, which if everyone knows me, it's a pair I dislike. New Zealand CAD and New Zealand Swiss. They're generally all slow movers. Now, you could put some of these pairs like the New Zealand CAD and the Oz CAD and probably the Euro Swiss in groups above, but I'm just using these pairs just to give myself a bit of a portfolio here. And like I'm trading every method I've mentioned in these videos, whereas I would suggest to you just get used to 1 or 2 of them and just find something you're comfortable with, then you can always ramp it up later. So these are generally slow moving pairs where there are few surprises. So they tend to be range bound for extended periods and have a habit of reversing to the mean. All that means is if you've got a center line somewhere, an average for them, they tend to go back to that average a lot more times than some of these other pairs, compared to, say, the yen pairs or something like that. So they're the pairs I'm trading on the daily time frame. Like I said, if you ask me about another pair, I'll tell you to give yourself an uppercut because you can check it yourself. And that's in a nice way. All right, let's get on the charts before I jibber on too much. Right, here's my setup. This is the template you would use for dollar cost averaging if you're doing all 3 styles. Let's run through it. QMP filter, red and green dots. Nothing changes there. 12, 26, 9, 1, 8, 3. Same. This is the Bollinger Band. This is the big one. I've mentioned this in my 4th book, and this is what I use for this sort of trading. Bollinger Band period, it's 80. Bollinger Band width is 3.0. I'm not even sure what that means. There's my colours. There's the 2 light blue lines. They're your lower band, your upper band, and your centre band, or your middle band, depending on what you want to call it. That's that purple magenta. I knew I'd get that right. Don't know what these are called, purple. Colour in the middle there. So it's 80, 30. MACD Platinum, nothing changes, 12.26.9. That's a gimme, that's a zero level in there. This is the QQE Advanced. All right, let's have a look at this little tricky. 10.14.2. Instead of 1.83, it's 10.14.2. Now, colours, I've only got the slow line highlighted. The RSI MA line is set as none, which is just a matter of going into your colours here, put none. So I'm only going to see that blue line there. Now, the levels, I've got the 65 and the 35. That's my upper level. That's my lower level. So overbought when it gets to 65, oversold when it gets to 35. And because I want a different color, I have to add this center band in manually, which is just by using the tools in the, whether you're in TradingView or MT4, the center band here is at the 50 level, this orangey looking band, all right? So they're very important. So that's my setup. Now there's three types of dollar cost averaging. I'll just run through them. Right, and I'm going to break down these charts. They're in pain of a spot. So this is euro pound. We'll come back to that. So we'll have a look at the first one. I've just stripped the charts down a bit to show you what the different settings are. Not different settings, the different types are. We'll go to the one based on the Bollinger band. So that's what they call that, DBB. It's pretty simple. This is very simple. Anytime price touches the lower or upper band, then there's a, if it touches the lower band, then there's a buy signal. We take that buy. And as soon as it touches this center band or middle band, as soon as it touches it, we're closing out half, putting a stop in place. That's your trade management. So on this case here, came down, touched, took the buy here, just touched it there. If not, touched it there. If not, definitely touched it here. Only the one trade. So that's a gimme. All right. So we'll just go along here. Touch the band here. Doesn't have to close below it or anything like that. Just has to touch it. Price has to go either to it exactly or on the other side of it at some point. Doesn't have to close below it or anything like that. Just touch it. It's touched it here. Spiked down. Touched it. Next buy, take the buy. It's gone up, hasn't gone, it's gone close to the center band. Here's another, ignore that sell signal. Here's another buy, take that. So if this one was for 0.1, in my case, this one would be 0.3. As soon as it touches the band in here, start doing some trade management. You might just close out this trade here and close out half of this trade and put a stop in place. Up to you. So that's a simple one. All right, let's move along. Very close to the band, but didn't touch. Right, we're thinking that might touch here. You can always just use your little Dewey Wiki here. Up here, you probably can't see that. It's your data window. Bring that out a bit so you can see. Put your little crosshairs on there. Look at your Bollinger Band, upper 102. Look, just here's the upper here, and we're looking for the high over here, right? So upper was 102.4437. The high 102.42. Damn, didn't touch. Didn't touch. Right, let's just say it did touch. Similar thing, sell down there. Doesn't matter, it didn't touch. Right, let's look for another example. All right, here we go. Here's a good example. Back on the buy side. Touch the lower band. Take the buy. Went nowhere. Stay in the trade. Don't get out the trade. No stops in place. We're not getting out. 0.1. Second buy here. 0.3. Nothing happening. Another buy here. 0.5. Still not going up. Now, at any time, because you use your multi-trade spreadsheet of your wish, anytime if you think you're in trouble or you're getting a bit nervous or you're not comfortable with it, just go to your multi-trade spreadsheet, put these three trades in. That being this little sucker here, you put the three trades in this case it'll be buy, 1, 3, 5. It'll give you an overall break even. if you don't want to be in this trade and you get the break even here, you might think this is a downtrend. I want to get out of these 3 trades, so be it. But just say we're not doing that. So we're in a 1 buy here, 2 buy here, 3 buy here. Come down here, 4 buy, 5 buy, and bang, there she goes. Touches that line there. Now I can guarantee you this one will be for 1, 0.1, 0.3, 0.5, 0.8, 1.3. Doesn't matter. You get out of, as soon as you touch that, you're out somewhere in here. As long as you're in a profit there, you've been a profit there, you probably lose on maybe that trade and that trade, but you can let this run longer if you wished and you'll make your money. No dramas at all. But you might get a little bit nervous with so many trades in a downtrend. All right, let's have a look for another example. So this gets messy here. Buy here, goes up. It's a good move. It doesn't reach that center band. Goes up, doesn't reach it. Goes up again. Now here again, you may be getting nervous. We're in a downtrend. You see, we're in a downtrend. You might decide that that's enough. I guarantee you that'd be overall break even for those 3 trades there. You might think that's enough. Or you could stay in, take the buy here, another buy here, then it touches up there. So you got 1, 3, 5, 8, 13. And I'm pretty sure if you got out there, you could probably put that in a spreadsheet. That's enough for overall profit. Or at least a break even, minimum break even, small profit, as soon as it hits that center band there. All right, let's look for more examples. Here's a big violent move in the market. Let's have a look what happened here. Here's your buy, already touched there, buy through the band, all good. Came down again, touched again. Once you clear that trade, you can start another sequence. Buy there through the band. Let's see if we can find a couple more. There's a buy there through the band, no worries. Let's see if we can find a sell, eh? And obviously these trades are far and few between. There's a buy, no problems. All right, here's a sell. Here's a good one. Sell, came down, went up. Another sell here, down through the band, all good. Buy, second buy, good. So no stops, doing nothing on an opposite signal. Like I said, these are far and few between. Sell, second sell, no problems. Here we go. Sell, second sell, third sell, down to the center band. This is probably the most recent. Sell, another sell in there, and through the center band here, all good. So you get the idea there. That's pretty straightforward. That's pretty simple. And you can have all these running at the same time concurrently. So we'll go on to the next setup. So like I said, I'll strip down these charts a bit. Now this one's based on the QQE Advanced. I don't need the MACD Platinum on the chart. So basically what we're looking for here is price to go above, not price, the QQE to go above the 65 level, or at least touch it. Again, doesn't matter where the closes or anything like that. As long as we've got this marked on the chart at some place, 65, this blue line or higher, then we start taking signals. In this case, we sell signals. So it's very similar to the previous one. So that'll be all right, coming up here, touches, goes through there. So we'll wait for the next sell signal. There's one, sell there. So it's 0.1. Ignore the buy, no stops in place, nothing else. Take the sell there. There's no need really to worry about this center line here. I probably don't need it on the chart, because what we're doing here is we're taking this down to the middle line, the 50 level here. Very similar to the previous one where we took it down to the center band on the Bollinger band. Here we're taking it down to the center band or the center line on the QQE Advanced. So as soon as we get down through that or touching that, start looking to close out these trades. So I can probably get rid of this. I'll delete that. Don't need that. I don't want to distract you. I just want to strip the chart down so I can show you exactly what we're doing here. So we're looking for overbought, oversold. Again, they're far and few between, especially on these slow moving pairs. All right, here's one up here. It's gone up through here. So we're looking for a sell. And there's definitely a sell there. Aiming for the center band, which we may have got close there. If not, we could take it there, and we're definitely through there. Second one there. Now, there are times where this may just poke through either side, and the signal, the buy or sell signal was previous to that, and there's not another one. But anytime price is lower than what that entry would have been on the initial sell, say the sell signal was down here, for example. No, say it was in here before it got above this. It was in here, and it kept on going up, and we're through there. You can take the sell anytime. As long as that sell's valid, just take it. Doesn't matter. But if it's below, I wouldn't take it. But if it's above your entry price, initial entry price, I'd take it. Probably didn't explain myself clearly enough there. Here, all right, here's a buy here. This is probably a good example, all right? This will help clarify what I just said. All right, there's your buy signal. So your entry would be here. In the meantime, the QQE is still above the 35 level, but it does drop down. Drops down and closes. The candle closes. I'm taking the buy there. That's still a valid buy signal. I'm getting a better price. Take the buy, and up she goes. Thank you, God, for giving me that example. All right, here's another one. Buy in here. Let's have a look. We've got to get some more. So buy, but definitely below the 35 level, way below it. So oversold, which some people will say there's no such thing in Forex, but it's just a term that we use. I'm not going to get into technical stuff. So we take the buy there, still haven't reached the line, the center line. There's a sell signal. We ignore that, take the buy there, take the buy. Now we start getting up, definitely through, in here. Start taking some trade management, close out one trade, put a stop in place. Like, here it goes, another buy. I don't think we get any sells, are we? All right, buy there, through the center line, about there. So we just ride that up. Right, now we're on the sell side. Definitely above the 65, take the sell. Down she comes through the center line, we're out. So find any other, there's another sell signal. We need one that gets a bit of bother. Sell, still above the center line, buy, ignore, sell, trade 2, still above the center line, ignore the buy, trade 3, take the sell, nice resistance level and price, bang, down she goes nicely. And we're straight into a buy, up to the center line, out. Here we go. Oh yeah, this is, remember I did the multi-sequence hedging on this CAD Swiss sequence through here? It was just a nightmare. Eventually got out at a profit, but geez, it took some time and the swap fees were killing me. All right, here's the first buy here. Here's your second buy, ignoring those sells. Third buy. Fourth buy. Getting very close, but we're not. Hang on, what we got? 1, 2, 3, 4. Take a fifth. 6th. Bang, up there, we're out. Look at that. All we're doing is accumulating trades. And I'll go through that center band. These are oscillators. So they always go back to at least the 0 level, and they always go from one level to the other level. But generally we want to get remember I said reversion to the mean? That's the mean, the middle band. All right, so we'll just drop down on a lower time frame. I don't want to drag these. So I'll just drop down the 4-hour chart, see if we can get some more examples. And again, I don't really trade off the 4-hour charts. It gets a bit ugly, as you can see. But let's have a look here. So here's a buy here, second buy, third buy, fourth buy. We're getting really ugly here. Fifth buy, and eventually goes up. Now, probably, whether you get out or not, you might have to keep on taking buys until you get to overall break even and take another one. That's why I try to stick with the higher time frames. I know the trades are far and few between, but that's the way it is. All right, what are we looking at? All right, let's go back to the full setup and we'll go through a bit of a sequence of events. I'll try and, right, here's a good place to start. Right, this is the euro pound, a pair I dislike never been a fan of. So let's have a look what we can do here. Putting all those three, well, I didn't really discuss, stand by. Yeah, sorry about that. I didn't discuss just the standard DCA, so I'll go through that now. All right, let's have a look here. Now you can add all these together, so you can really add to your positions, and that's what I generally do. So I know the chart looks a bit busy, a bit cluttered. There's a lot happening. I've got everything on the chart. So for example, let's have a look. Now we'll go to this point here. We've got a red QMP dot. MACD platinum's above the zero level. That's a DCA entry for me. Don't worry about the Bollinger Band. Don't worry about the QQE advanced. We're just going back to the high probability setup. So there's a red dot there. There's another red dot. Now, in the meantime, prices hit the upper Bollinger Band. So we go into DCA Bollinger Band method 2. So if this was sequence 1 on my DCA, this is going to be sequence 2 sell on that DCA. But it's also going to be my sequence 1 Bollinger Band sell. I know this gets a bit confusing, but you'll see how this works. Hopefully we'll get to an example. So we'll just go with the normal DCA first. So sell 1, sell 2, come down here, we close below the 20 moving average. I'd be putting that into the multi-trade spreadsheet. Remember that, sucker? Putting the facts in there. If I'm below that 20 moving average, and I'm at overall break even or better, I'd be looking at closing those trades out or doing some trade management. But in the meantime, let's say we just think we're out of that one. We'll go back to the upper Bollinger Band, first sell, second sell, third sell, down through the middle band. We're out of those trades, managing those trades. There was no action on the QQE advanced, hasn't gone to overbought or oversold. So at the moment, we're just concentrating on the Bollinger Band one, which we've done, and it's been cleared. And if we look for normal DCA trades, there's nothing here get me excited. We could probably look at a potential sell there. The MACD platinum's just above the zero level. Take the sell, and once it starts going down below the entry level and the MACD platinum's through the zero level, we close that one out and take some action. All right, let's go back into it. Right, just a normal DCA buy here. Buying. MACD platinum's below the zero level. Haven't really closed above the moving average 20, which is the yellow line there. Ignore the buy. Take the second buy here, and we'll just try and get that up. Now, MACD platinum's gone through the zero level, and price is closing the other side of the 20 moving average. We want to at least get some profit on this or get to break even, worst case scenario, because now we're MACD platinum on the other side of the zero level, we're in sell mode. So we just get out of that trade at break even, which you would probably around in here somewhere, or even on this spike of this candle here. Wouldn't take much. You'd probably even get a small profit out of that if you wished. You could probably in here somewhere, or definitely on this one, you could probably close, say, all of that trade, part of this trade, put a stop, and you might be under lows and just ride it up. Who knows? All right, let's go. Sell. There's your first sell signal there. MACD platinum above the zero level. There's nothing happening with the Bollinger Band setup or the QQE advance. So we're just in a sell mode, nothing happening. Second sell, MACD platinum still above the zero level, nothing happening. Now we touch the Bollinger Band again. Take a third sell on that. So 1, 2, 3. And again, we're closing below the moving average 20, and the MACD platinum's very close to the zero level. We'd probably be out there somewhere, I'd imagine. If not, you'd definitely be out over here. I'd guarantee you'd be out on those three. Again, you put it into the spreadsheet, and you couldn't lose there. But in the meantime, because we've touched the Bollinger Band, and we've also gone into overbought on the QQE advance, we're taking the sell here. Second sell for both. We're not looking at MACD platinum. We're just those trades. Now, this is where it gets a little bit tricky. So remember that we're one sell here for both the Bollinger Band and the QQE advanced. Neither are out yet. There's a buy signal here. Now, it doesn't apply to the Bollinger Band or the QQE advance, but this buy signal is technically a valid buy signal for the DCA. So we'll take a DCA, just a normal DCA trade there. Second sell for both this and the Bollinger Band. And price drives down on both. Might have got a touch there, doesn't matter. Definitely over here for both. So we could close out of those sell trades, all right? So both the QQE advanced and the Bollinger Band were out of both. Through the center line there and touched the center line there. All right, now we've still got this buy, DCA buy on from here. That's one. Here's your second one. Price goes up. There. MACD Platinum's through the zero level. We're probably out in here somewhere. We could get out of those two trades at break even, all right? Sell, valid sell signal here. MACD Platinum through the zero level, we're out. That's a DCA trade. Here's another buy trade. Just a normal DCA trade. Buy, big move up on the other side. MACD Platinum's about through the zero level, close out half. Let's keep on going. Looking for some action here. No action there. Sell, spikes down, probably not enough there. Next candle down, definitely the MACD Platinum through the zero level, close half. Buy. And we've got a nice little move up there. MACD Platinum through the zero level, close up. Sell, MACD Platinum through the zero level, close on the other side of the M820, close out. Buy, here we go. We'll take this buy here. We've got to get some trade signals. It's 31 minutes. Buy, second buy. We'll take a third buy. So we'll take that buy. Fourth buy. MACD Platinum through the zero level. Look, we're trying to get out of all these trades. So we're in 1, 2, 3, 4, anywhere in here, across that level there, you definitely get out of the profit. No worries, or close out those trades at break even, worst case scenario. Then we're straight into sell mode. Down she goes, very close to a touch there. Can't lose on that. Big move on the other side of the MA20. And just kept on going. Right, here we go. Let's try and get some trades going. Buy here. Nothing there. Second buy there. Big move up. MACD Platinum through the zero level. You definitely get out of those trades there. In the meantime, look what's happened here. Got into oversold on the... is there a touch? There might have been a touch there also. We'll say there's a touch there. Looks like it's pretty close. So both Bollinger Band buy and QQE buy. And let's see where we go here. Second buy for both there. Up through the center line there. And definitely a couple of 3 touches there. So a bit of trade management. In the meantime, took this sell trade. So you can see how we're getting trades inside of trades. Here we're in buy mode for the Bollinger Band and the QQE advanced loss recovery. Then we went into sell mode here with just a normal DCA. And there's a second sell trade there. Look at the MACD Platinum's above the zero level. And there's a third sell and it drives down. There's your profit there. And we go to buy mode again. Closed above, probably get a few pips there, nothing much. Nothing entry, nothing there. A touch of the upper Bollinger Band again. So let's see where that takes us. So let's look at the Bollinger Band. Sell, 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 and down to the center band. So that's a winner. In the meantime, we had this buy, normal DCA trade. Up, set, MACD Platinum through the zero level. Took it. Another buy here. MACD Platinum up through the zero level here. Can't lose on that. These have been break-even trades, which is great. Who cares? And in the meantime, no action on the QQE advance. So let's just go. See what we've got. So here's a normal buy. Oh, close there. Now this is an example. That's if you look down here, that's gone through or touched on the QQE. And you're probably thinking that the Bollinger Band and the QQE advance sort of move together. There's times they don't. So this has come nowhere near the bottom band, whereas this is coming oversold. So it just gives you another option. You don't have to do all, like I said, but say here's the buy signal and it happened before the touch. So the entry would have been around there, and a couple of times there, prices dropped below it, still a valid buy signal. I'm taking that buy. Even though it started moving away from it, it's dropped below where the entry price would have been, and still a valid buy signal, taking the buy. So that's a standard DCA buy, which you'd probably close out half and it closed above the MA20, and also wait for it to cross the center band or the middle band line on the QQE advance, which is up there, close out half. And we just go straight back into a normal DCA, MACD platinum through the zero level, bang. Let's see what happens in here. It's a little bit messy. First buy. Yeah, it's up. Where's the entry there? Second buy. Once the MACD platinum through the zero level, we'll just get out somewhere there. Now we're in sell mode. Sell there. That's where we're going. Second sell there. It's getting a bit ugly. Third sell there. MACD platinum through the zero level. Price is down here. There's plenty of opportunity. 3 days, plenty of opportunity to get out. That'll be for 5. That'll be for 3. That'll be for 1. So you couldn't lose on that. Take the buy there, MACD platinum through the zero level, close out. Touch of the upper Bollinger Band, and you see it went nowhere near overbought. So take the sell. As soon as it touched the purple line, we're out. Nothing trade. Normal, and that would be also a normal sell. Normal sell. DCA sell. 2 trades there. Buy, DCA buy. As soon as the MACD platinum through the zero level, start looking to close out. Nothing trades. Again, we've had another touch. So it's a sell to the purple line, which gives you nothing, but it's also a sell for a normal DCA trade through the MACD zero, just trail it down. You can see here you get multiple trades here. This video has gone for 37 minutes. I know it's a lot. It's a little bit confusing. Break it down. Just do what I did. Showed you the 2 different charts there with the different setups where you just go through it and check things. It's pretty straightforward, pretty easy. Just putting it all together can be a little bit tricky. And as I said, you don't have to do all 3. You can just do 1 if you want. Pick the pairs that you want. Just be careful. DCA on the yen pairs can get very messy very quickly because those things can just keep on going in the one direction for a long time, and it's normally the direction you don't want it to go in. All right, if anyone's got any questions, feel free to fire away. Happy to answer them. If you want further breakdown, another video for any of these methods, just let me know. I can put something together. Like I said, they're not the most exciting videos on the planet, and I tend to trip over my words sometimes, but it's they're all pretty straightforward once you break them down into small bite sizes. All right, thanks for watching, boys and girls. Enjoy the rest of your day, and I'll talk to you good folk later. Cheers.